How's it going, everybody? So, I want to talk about RKDA. This is a live trade from Friday, August 9th, 2019. Now, this particular trade, let me just walk you through the plan here real quick. If you look at the bottom right of your screen, you'll see that I've highlighted these key areas that I want to trade based on the daily chart. Okay, these are key technical resistance levels that I see on the chart. First one being 3 and then 350 based on this levels here, and then around 390. You could argue 390 to 4 since 4 is a whole dollar. And then to me, from there, you jump right to 5 here in the gap fill area. Now, there's some support here that is around 450. That I mean, you could potentially play that there, but it's 450 and then 5. You've got a lot of levels overhead that when it starts running into these, it's going to start selling hard. So at the open, the plan was that it pushed to the $4 level, okay? Because 350 was the pre-market high. The 350 line ended up working to the penny perfect during pre-market. So what I like to see is, on these particular setups, is I like to see them break the pre-market highs, get some longs in there, and then start to run into technical resistance levels. And that's the opportunities to short. So for me, I was like, okay, if this breaks 350, the line is 390 with a whole dollar of 4 right there. You've got a tight stop above that, either 410, 420, whatever amount of slippage you want to use. But that was the initial plan. And then I started identifying the Deathline, which is I've come to love a lot. And what I saw was a clear level at 280. Now, disregard these candles here. Okay, this big dip is all late prints, bad prints that basically just mess up the chart. It doesn't ever happen. It didn't ever get that low. So I saw this little wick on this candle right here. If you look at this 5-minute candle, there's a wick right down here at 277. That was a level that I liked. 280 happened to be a support on the line chart as well. I said, okay, a breakdown below 277, that's the death line to me. That's the play for me right there, okay? Now, if it didn't spike and it started to just die like it's doing at the open here, then the plan is wait for this breakdown, and then that is when we place our trade and set our risk and play the odds. So let's go through this and let's look at how this plays out. So right here I start considering an order because I see that $3 is broken and it can't reclaim 3, okay? So the tape was very heavy there. You could see that the ask was 295 several times and it could not break above 295. So to me that was the indication that this is very, very weak. Granted, there is support here at 280. So the plan was take a small starter with risk above VWAP in this case, which was around 315. So if you notice here shortly, there will be a fill. So got rid of 295 seller, went up to 297, but 295 tipped right back over. And then here we are again, 295, 297, again, same 3 line all over the place. And then 3, 3, 3, can't break 3, can't break 3. So once I see that, that is when I start to consider that I probably need to put a feeler on, and there's my feeler. So it filled at 290. Again, the stop is above VWAP here on that starter. This is just a trade to kind of curb my FOMO and make me pay attention. I don't really recommend starters to anyone. Now, one thing I want to show you here real quick, I'm going to rewind it real fast. You see those bidders right there? That 22K routed to ARCA, NASDAQ, EDGE, and BATS. That right there is clearly someone trying to prop this stock, okay? And remember, it's at 292, okay? So now you see the reaction, it immediately pops. Everybody's going, oh, there's a big block here. Now watch what happens. Okay? Where's your bidders? When 292 tests again, where's the bidders? They're not there. Here's the 3 break. Okay, so remember the stop is at VWAP. So right here, breaks above VWAP, I'm going to take it off. But it didn't. Notice what happens here. Okay, let's slow this down and rewind real fast here. Real nice and slow. Let's see if we can catch where the exact spot is. Right. Oh. So you see his prints at 292. So it's like a minute 37. Right there. So notice how there's no bidder anymore. There's no one trying to manipulate the price. If you look at the tape, you can see 292. These prints, they're definitely not 20,000 shares worth, but you do have a bidder here, 13K. So notice he gets taken real fast. 286 sells, and then you get a 286 seller that pops up right here. See at 288, you get 10K that pops up. Sorry, it was 288, not 286. And then he moves his order down to 286 really quick because, again, this is kind of a, they're trying to push the price down, showing size on the ask. Same thing that a long does, showing size on the bid. Trying to create volatility. Remember, the line is 277. Below that, and that's a Deathline break. So right now, we have broken the Deathline, okay? But notice here, see that 5-minute candle? It does not close below the Deathline, all right? So that is my confirmation that I noticed in these charts that when it closes below the Deathline, that's how you help yourself prevent chasing or shorting the bid. Because here's what would have happened. If you would have shorted just now, you probably would have gotten filled at like 275, maybe even dead bottom. So your average would probably suck in this particular scenario. That's why I don't like shorting the breakdown. I like to wait for the breakdown to confirm, and then I will short a push into that death line or slightly above that death line, and I will risk a higher high. So you notice it's a clear higher high here, and this particular number is 306. That higher high of this candle. This has become my risk. So now I have 290 risking 306. I want to see it confirm. There you go. You see a new low of the day. And now I want to see this close below the death line. So you can see over here to the right, what I was doing is I was identifying this $3 line. You can see that's a pretty clear level. You've got this support over here. You've got these lower highs here, so you can see that $3 is a clear level. So again, what we want to see is we want to see a 5-minute close below 277. It's moving pretty slow though. And here is the actual candle that looks like we're going to get the close below that level. And there's the close. So now what I was doing is I was just verifying that it did close below. So now what I'm looking at is I'm looking at this 290 line and then the 3 line. So I'm placing orders based on 290 and 3. So I have a 287 order and I have a 297 order based on both of those. And my stop is this candle right here. So you notice I'm clearing the pivot points off of this level. I'm looking for targets. As you can see, there's a pretty clear level here around this 240 area. So there's my fill at 287. Now it's starting to get some strength. So I go ahead and place a stop. At least I thought I did. I had not placed a stop. It didn't go through, or I messed something up. I'm not sure because of what's about to happen. So here shortly I fill. There's my fill at 297. I have now a 292 average, risking 307. Right here is where it gets very, very interesting, and I'm about to slow down the action right here. Watch. Notice that 305 goes away. We're now above VWAP. Look at all the buying that happened at 305. 305 by 306. Watch what happens when it breaks 306. Remember, 306 is this high right here, which most people were probably using this as a stop loss. Again, that was probably my mistake of using a very obvious level. Again, that is oftentimes a failure of stop losses, hard stops in that matter, is because you will many times pick a level that most people will. So you become part of the herd. So watch what happens. 306 goes away, and boom. Notice this. When 306 goes away, we've got 307. And right after 307, it's pretty much to the moon. Look, 307 goes away. 308 pops up. That's it. 308 goes away, and it immediately becomes a 315 seller and a 310 bidder. Okay? Notice what happens here. 315 goes away in really 2 or 3 prints. It disappears. And look, 320, 325, 27, 28, 330, 333, 32, 34, 35, a 10,000 share order, gone at 335. There's a 10,000 share here. Now granted, remember, it did not happen this slow. I slowed this down by nearly 50% of real time. So that was almost half time from what the real market performed. Okay? The point was to show you in an extremely slow manner how these things can become so illiquid so fast. Me, I end up taking a loss on this particular stock. It's fine. It's not fine. I mean, granted, it's a loss. Nobody likes taking losses. But I did not plan to stop out up here. Either I did something wrong with my stop loss, or the actual stop loss did not execute because of the slippage. There were no orders for it to pair up with. so it simply just went parabolic. And that can happen in small caps. And this is this is something you need to be very aware of when you're trading small caps with stop losses. Is slippage can happen, but it's better to be out than stuck. Okay, if you're short. Same thing with a long. If this all of a sudden just broke down below 270 and hit, boom, 250 real quick, I mean, it's the same thing as this. Granted, this is much more exaggerated, but on the long side, it's the same thing. It could have hit 250 and then just went, and then failed below this 243 low right here, and then we're back to red on the day, which has been happening a lot. So the reclaim here over this level was still a short to me, as long as it was below this level. Unfortunately, it looks like I put a stop loss where everyone else put a stop loss, and I don't like doing that. That happened to be a mistake that I ran into here. The fact that that was a very obvious level to stop out, and but that happens. I know it's an obvious level to stop out, but I did not anticipate the liquidity to completely disappear. And for us to go from $3, or for us to go from 307 all the way up to a 350 halt in a matter of seconds. So hopefully this has helped you guys learn something, and thanks for watching.